Today, we are going to be going over the exact goal strategy that helped me make $10,000 in December 2025. This strategy also helped me secure $200,000 in funding as well as more than $5,000 in payouts. We have 2 months left to capitalize on this strategy, so let's get to it. So first things first, how I discovered this strategy is because of this video right here. In this video, Max from New Capital said that gold tends to go up by 100 points every year from December to February. So I confirmed their theory by looking at seasonality charts. So over here, this is a seasonality heat map of different asset classes over the last 15 to 20 years and how each of them performed during the different months of the year. So over here, you can see that gold tends to actually go up in December, January, and February. So this chart confirmed what they were saying in the video, and I double confirmed this with another separate source, and over here you can see that they also confirmed this theory. December goes up by 0.8%, January 3.2%, and February 0.8% over the past 20 years. And one more thing I did was to look at TradingView chart. So this is the monthly time frame in TradingView, and over here I've circled out December, January, and February over the past 11 seasons, so 2014 December all the way to 2024 December. And what I discovered is that this theory played out through 90% of the time, and only once it did not play out, and it was over here in 2020 where February closed lower than December's open. Now that I've verified this theory and it is true that gold tends to go up from December to February, what I did next was to find a mechanical strategy, a very simple mechanical strategy which allowed me to extract the most amount of returns with the least amount of drawdown. I like to keep things simple and decided to use a very easy break and retest strategy using multiple time frames, a higher time frame and a lower time frame. So over the past 2 months in October and November, I was testing different variations of this strategy and optimizing it so that I can get the most risk-adjusted returns. What I did was that I was optimizing different take profit levels, different stop loss levels, different EMAs, different time frames. Should I be using the 1 hour and the 4 hour, or should I be using the daily and the 1 hour? And after 2 months of hard work, I landed on this strategy, which I'm about to show you now. Okay, so here's how the strategy works. This red line you're seeing is the 20 EMA on the daily chart. So this is the daily time frame. What we want to see is that price closes above the daily 20 EMA. Once this happens, it's a trigger that says like, okay, we can start to look for longs on the lower time frame. So if I remove this box, what we want to see is that on the daily time frame, if it closes like this, it means that on the 1 hour time frame, price is already above its 50 EMA. So this is 20 EMA and this is 50 EMA on the 1 hour time frame. And when we confirm that price is above the 50 EMA of the 1 hour chart, we place our buy limit at the 50 EMA. Price will come back, tag us in, and then go up. That's our bias, and that's how simple the strategy is. Now I'm going to show you a real example of this year, which I took. So over here, I've marked out that this is Friday 28 November 2025. This is the daily chart, and this line over here is the 20 EMA. So over here you can see that price is clearly above the daily 20 EMA. So once we confirm that, we go to the hourly chart and we wait for price to tag us in. So over here you can see that price is above the 1 hour 50 EMA. We place our buy limit at the 50 EMA and we wait for price to tag us in. It hovered around break even for a bit, but it finally broke up and hit take profit of 2 Rs. By the way, our stop loss will be 1.2% of price and our take profit is 2 Rs from our entry. And there is no limits to the amount of trades I will have open at a single time. So for example, I could have another trade here with 1.2% percentage of price stop loss over here, and then another trade over here, and another trade over here, and another trade over here. There were plenty of trades that I took, and I'll show it all to you later on my live broker account. But yeah, so that's how simple the strategy is. Once again, let me repeat. We are basically looking for price on the daily time frame to be trading above the 20 EMA. Okay, so this is the 20 EMA. We are looking for price, the daily chart, to be above the 20 EMA. And once that is confirmed, we look at the hourly chart and we want to see that the low of the candle here is above the hourly 50 EMA. So, and this obviously is from December onwards, December all the way to the end of February. So that is how simple and mechanical this strategy is. You can start trading this strategy from now all the way to the end of February. But before you do that, just look at the statistics of this strategy. Now, this is my free ebook, and I have the strategy over here, strategy 4. So over here, I go into more details about the strategy. I show you proof that I passed my funded account with this, passed my funded challenge with this strategy. And look at that, it's only step 1, wait for daily to be above its 20 EMA. Step 2, we enter on the 1 hour 50 EMA. And you can see the trade management. It is, we set our stop loss at 1.2% of the price below your entry, and we set our take profit at 2 Rs. And over here are some visual examples. Yes, multiple positions will be placed, and this is like 9 positions that I took this year, and all of them hit take profit because gold went up and hit all-time high this year. So this is the backtest report over the past 5 years from 2020 to 2024. This strategy net about 89.73%, close to 90% over 142 trades. A very high profit factor of 2.46, a 63% win rate, and a very low drawdown of only 9.63%. Yeah, so you can see that we have about 13 max consecutive losses and 26 max consecutive wins. So with this strategy, since we already have a bias, we want to keep stacking long positions in our favor to capitalize on this bias. And we have a very strong reason why this bias will play out and how often it plays out, which is 90% of the time over the past 11 years. So, and if you want access to this free ebook, just drop me a DM on Instagram and I'll send it over to you. And this is the strategy, the algorithm taking the trades on my FTMO account. So here you can see all the XAUUSD. So I manually closed all of this position because I wanted to secure, it was the end of the week and I wanted to secure my payout as well as the refund of my evaluation fee. I obviously would have made way more if I just held. To be honest, I think I would have made about like another 10k or something if I just held. But whatever, it is what it is. I decided to close and I live with it, and I'm happy with it. And this was on instant funding. This is a funded account, by the way. So yeah, all of it hit take profit here. I have about 4.1k with them. This was on my other account. Look at that, on my XAU positions, all hitting take profit, some hitting stop loss, but this was another strategy. Last but not least, this is my new account, which I deposited about 16,000 and profited about 6.8k. So that is roughly 42% just this month of trading. I deposited 16k in December just to capitalize on this strategy. So like in November and October, I was really focused on trying to find the best way, like I said, to extract the most amount of returns with the least amount of risk. And I'm happy that I did that, put in the work, and finally achieved what I intended to do. So there you have it. That is the strategy. It is a very simple and mechanical strategy that you can test as well as capitalize on over the next 2 months, because we only have 2 months left before I turn off this strategy and before gold stops going higher, based on its history of how it goes up higher every December, January, and February. That's it for this video. Let me know what you think about it. Let me know what you think about this strategy, and if there are any more seasonality strategies or seasonality plays that I should look into, because after this strategy played out as well as it did, I'm very interested in seasonality plays, and in fact, I'm looking at other seasonality opportunities. So drop a comment in the comment section and let me know if I should check any of them out. Also, if you want access to my free ebook, just drop me a DM on Instagram and I'll send it over to you.